What's going on, traders, and welcome back to my YouTube channel. Today's video is going to be stacked with so much value. I'm going to be showing you my new trading setup, a live trade that was taken on GBPUSD, which totaled to a +10 risk to reward ratio, and then some educational content at the end of the video as well, breaking down how I trade in different phases of the market. Now, over 50% of you who watch my videos still aren't subscribed to my channel. So if you're watching this and you're not subscribed, make sure you hit the subscribe button so you don't miss any more content. Make sure to leave a like and a comment as well. Let me know your thoughts in the comment section below, and I'll be sure to answer as many of your comments as I can. But for now, guys, I hope you enjoy the video. Let's get straight into it. Okay, so this is my current desk setup that I've had for like the last 2 years. As you can see, we've got the black desk, got the Samsung Odyssey 49-inch screen. Now, don't get me wrong, this screen is great, but the only problem is it's a bit too big for the desk that I've currently got. As you can see, it takes up about 90% of the desk. Got the laptop here, which is basically hidden behind the screen right now because it doesn't really fit. And you can also see tucked away behind here, there's a photo of me and my missus, which I'm gonna be in the doghouse if I don't have that in front of the screen. So I need a bigger desk. Luckily for me, Desktronic has sent me this standing desk, which is absolutely massive. It's about 2 meters wide by 80, so it's definitely gonna be a lot bigger. I'm gonna put it together today with Ryan, as you can see here, and we're gonna update you guys and show you the unboxing and the setup, and then my new trading setup once it's complete. Okay guys, so I've had the desk now for a few days. As you can see, I'm standing up right now. Been using it for my trading all week, and honestly, it's such a game changer. Being able to just stand up, move around, adjust it is just so much better than just constantly sitting down. And I highly recommend anyone to actually get a desk like this if you can. So shout out to Desktronic. I mean, this desk is adjustable, so you can adjust it to your height, whether you're sat down, stood up, whatever it may be. You know, there's a USB-C charging port. You get 5-year warranty on it. It's smooth, it's quiet. I'm not distracting Ryan when I'm trading with it, even though I am standing up, obviously, but it's great. Like, I'm getting all my steps in every day. I'm staying active. It's just honestly the best thing that I've had for my trading setup since I've started trading. Desktronic have actually been very, very nice to give me a unique code for you guys. So if you actually want to purchase a desk from Desktronic, you can go to their website and you can use code ANT and get a discount. So I'll leave it a link in the description of this video for you to go check them out. Honestly, one of the best purchases I've ever made. So yeah, shout out to Desktronic for the desk. Right now, I'm actually just analyzing GBPUSD, and I'm about to get into a trade. So what I'm going to do is I'm actually going to bring you guys in and show you the trade that I'm about to take potentially, and then obviously the trade management as well, and obviously how the trade performs. So hopefully it's a good trade. I'll bring you guys in now and let's see how it plays out. So here we are on GBPUSD on the 1 minute time frame, and I'm going to walk you through why I'm looking for a buy position. First and foremost, looking at chart patterns, we can see how price has formed a inverse head and shoulders down here, with this side being the left shoulder, down here being the head, and then this side being the right shoulder. Okay, so that's early signs of a reversal. And then this strong impulsive move that we had to the upside, break in market structure, was the shift in momentum that we needed, the shift in market structure, breaking through the neckline of the inverse head and shoulders, which is through here. And if I just drag this across, you can see that we corrected to the downside to retest previous level of resistance as support, which is the neckline of the inverse head and shoulders pattern. We can see that, we can see it's very corrective. We can see we were moving to the downside within bearish market structure through there. And if I just draw another one from here, we can see where we were correcting. And we can also see that we've now broken out of this. But the only thing is, when we broke away from this channel, we also didn't break through this level of resistance within the market there. So that was a level that needed to be broken. As you can see, we started to channel sidewards between this support and resistance. So first of all, I needed to see this level broken, which we've now done. We've broken towards the upside. So now all of the roadblocks are out the way. The confluences have stacked up. We have the inverse head and shoulders. We have the break of the neckline, the retest, the correction, the break away from this channel. And right now, I'm going to be looking for price to pull back correctively to retest this level of resistance, and that's when I'm going to look to take a buy position to continue towards the upside. So yeah, I'll update you guys when it comes back down to here. If we get a nice entry, I'll obviously update you. But yeah, let's see how it goes for the rest of the day. Okay, so as you can see, we have now moved into profit. We've broken through the most recent high point, so my stop loss has been trailed to break even to protect capital. I'm not going to be looking for a scaling position on this trade purely just because of my availability today. I have some other things to be doing, so I'm not going to be actively watching this trade as much as I would want to. But my stop loss is trailed to break even. If we do continue to form bullish market structure and we form a higher low point and we continue moving up, I will be actively watching on the sidelines, and when that does happen, I will be trailing my stop loss into profit to secure something as we continue to rise. In terms of my take profit level, I'm going to be looking for the same type of movement that was formed down here on this impulse move. So if I just copy and paste that, I'll be looking for a similar movement to take place from here. So I'm going to have my take profit level around that level. That's what I'm going to be looking to target. But we'll see what happens. It's looking good. We're currently obviously just forming structure. Price isn't going to just move in one direction. The whole time, we're going to get times where we're going to pull back. And if we do so, I'll just be trading my stop loss underneath along the way. But all in all, it looks good. And I'll keep you guys posted on how it moves for the rest of the day. Okay, so price has developed. We are close to take profit right now. I've been trading my stop loss with price action as we've been moving up. I had it below here, which secured a 1.5. I had it below here, which secured like a 3 risk to reward ratio. But right now, where the stop loss is around a +5 risk to reward ratio if price was to reverse and obviously take us out. But it's looking good. Take profit is set, and I'll update you guys on how it moves in the next couple of minutes. Okay, so the trade is finally over. GBPUSD hit take profit for a plus 10 risk to reward ratio. I mean, the price action was pretty perfect if you ask me. There's no real complaints, there's no lessons learned, apart from learning that what I do works, essentially. But yeah, great trade regardless, and I hope you took something away from that. Now, before we get into the final part of the video where I will be doing kind of an education bit on trading within different phases of the market and how you can best utilize the understanding of the phase, I just wanted to briefly talk about prop firms versus personal capital, because there's a lot of things that most people don't actually understand when they're trading funded accounts. And we'll get into the funded account bit first. So let's say you're trading a 100K funded account. You're not actually trading with 100K. You're not actually trading with 100K. What I mean by that is you're only allowed to risk 10% of that account, right? Because you have a drawdown limit on the account, meaning if you fall below 10%, the account is gone. So what that means, guys, is you're not trading with 100K. You're technically only trading with 10K of available capital, okay? Because if you're trading a personal account with 100K in it, you can go into 20% drawdown, 30% drawdown, still have the account, still bring it back into profit. So you're trading with 100K. But if you're trading with 100K with a drawdown limit of 10%, that 10% is your available trading capital. Meaning, guys, if you're risking 1%, you might think it's 1%, but because you're only trading with 10K of it, you're actually risking 10% of your available trading balance, okay? That's something to consider when you're trading these prop firms. Now, that brings me on to trading personal capital. A lot of people ask me, like, how much trading capital am I personally trading with? And it's actually a lot less than you guys might think. And I'll tell you the reasoning for that. Because we're going to compare a 100K personal account to a 100K funded account. Now, a 100K personal account, I have the whole available margin to trade with. With a 100K funded account, I only have 10% to trade with. Okay, so I'm trading with that 10%. If I have my personal capital and I have 100% of it, if I risk 1% per trade, I have to technically lose 100 trades to blow that capital. And guys, I'm telling you, if I was not a good trader, if I lost 100 trades in a row, I would not be trading. Like, I shouldn't be trading. If you guys should not be trading if you're going to be losing 100 trades in a row. So that then brings back to the whole point of, why would I have 100K in a trading account and risk 1%? Historically, through my 8 years of trading now, my worst kind of losing streak was around 12 trades in a row. Okay, we'll use 10 for easy maths. But let's say, throughout my trading career, my worst kind of period was losing 10 trades in a row. Now, if I risked 1% per trade, that means if I had 100K in account, the worst that would have ever gone to is 90K, okay? And the rest would have just been going back up and up and up. Now, what that means, guys, is I have £90,000, let's say, in a personal trading account, sat there doing nothing, okay? It's sat there just to be kind of used as this whole risk 1% thing. But what I do is, guys, rather than trading 100K and risking 1%, I will trade with a much smaller account, but be risking more per trade, okay? Because if I know historically I shouldn't really be losing more than 10 trades in a row, I can increase my risk per trade to 3, 4, 5% per trade. Because even with that, if I have my worst historical drawdown that I've had, I still won't blow the account. But at least then, rather than putting 100K in account and having 90K in there just sat there doing nothing, I can use that 90K to invest into other projects, other algorithms, buy funded accounts, have other traders trade for it, other business ventures. rather than just trading with a whole amount of capital. So yeah, I hope that makes sense, guys. Probably rambled a bit, but a little bit about kind of the difference between funded accounts versus personal capital for myself personally. So yeah, I hope that was helpful. But yeah, guys, we're gonna now go into the whole education side of trading phases throughout the market. So yeah, I'll see you guys then. Okay, so before we jump into the trade breakdown, I'm just gonna show you guys some of the strategies that we have available at Vanquish that you guys are actually able to copy. So we've increased our portfolio. We have multiple different strategies, some manual, some automated from EAs. But this one has just come to us from a manual trader that we have onboarded at Vanquish. Is our newest one, and it's doing insane results. As you can see, the overall gain that he's had on the account is almost 9,000%. He's averaging around 16% a month, and obviously a maximum drawdown of 26%. So the worst kind of trading period he had, he went into a 26% drawdown. But with the monthly returns, it's not surprising, okay? It's almost like a higher risk strategy, and it's performing very, very well. Now, this trader that we've onboarded at Vanquish has been trading since 2022. As you can see, verified results, 2022, 2023, 2024. Some huge gains that he's had. And 2025, he's already doing some insane returns. As well as this trader that you guys can copy, we do have a list of multiple other strategies, as you can see here, also returning some great results. And if you guys want to copy any of these systems, automated and manual, as you can see over here, if you guys want to gain access to this, it's automated trading. You don't have to do anything. You just copy these traders that we have. The link for this will be in the description of this video. So just click that, and I will personally be in contact with you if you want to get started. Right, so now onto the charts. I'm going to be breaking down for you guys the importance of understanding which phase of the market we're currently in. Because by understanding what phase of the market you're in, you can get a better understanding of how you can actually manage that trade according to what phase the market is currently trading within. So we'll break it down now, and hopefully it makes a lot of sense once we complete it. So this is USD JPY, and it's the 2-minute time frame. Now this whole idea that I'm going to be talking about works on any time frame. This is just an example that I'm going to be looking at because it's pretty perfect the way that it works out, but it does happen all the time. So to start with, the phases of the market, what are they? So the market will move in 2 phases. It will move in an impulsive phase. In this example, let's say we're moving to the downside. It will move impulsively to the downside, and that tells us that sellers are in control of the market. Okay, this is normally following the trend. If the trend is bullish, then you'll get impulsive moves to the upside. If the trend is bearish, you will get impulsive moves to the downside, because that tells us that sellers are active within the market. And then following that impulsive move, we get what is called a correction. And in this instance, we get a correction to the upside. And what this tells us is that sellers have taken their profits, and then this allows buyers to step into the market. But there's not a lot of momentum in the buying when buyers are stepping into the market, because price is moving to the downside. We're bearish, so there wouldn't be as many buyers within the market. That's why you get this correction. And then following that, you get the continuation. And the continuation is called a continuation because it's continuing with the trend that market is in. I hope that makes sense. So we want to understand which phase of the market we're in, because when I trade, I'm trading in both phases, okay? I am trading within the correction, and I'm also trading within the impulse and the continuation. However, the way I actually manage those trades is different depending on which phase of the market we're in. For example, when we're in an impulsive phase or a continuation phase and we're going with the trend, I will be more relaxed with how I manage my position, meaning I'll be more relaxed with how fast I trail my stop loss to break even. I will also be more relaxed with how I set my take profit level. For those of you who are inside my group and have seen me trade for a while, you understand that when I'm going with the trend, I tend to not even have a take profit. I tend to just continue trailing my stop loss with price action to catch as much of the trend as I possibly can. However, when I'm trading inside a correction, it has a expiry date, okay? Because at any given time during this correction, I have an understanding that I'm going against the trend. Meaning, I have an understanding that at any given time, sellers can re-enter the market and drive price the completely opposite direction. Meaning I'm trailing my stop loss a lot more aggressively. I'm having a hard take profit level. And the overall management is just completely different. So most people would say, well, just don't trade within the correction and just trade during the impulsive moves when you're going with the trend. That's fine. You can definitely do that. But sometimes you don't know whether the trades you catch during the impulsive moves are going to be winning trades. They could be losing trades. And if you didn't take the trade within the correction, you're missing out on potential opportunities. Just because you trade with the trend doesn't necessarily mean it's going to be a winning trade. So that's just all it is. You're just increasing your chances of taking advantage of the whole move rather than just waiting for the highest probability setups, okay? But let's move on to the actual example now and discuss in real time how you could have taken advantage of this trade. So in this example, we can definitely see that price is moving towards the downside, okay? We had this level of support through here, which price broke through towards the downside, moving very impulsively, okay? We say impulsively because look at the length of the bearish candles and look how quickly we were able to make this move, okay? For example, this move happened from 8:30 until 10:40, okay? So just over 2 hours, we had that impulsive move to the downside. And then price corrected back up towards the upside. Now, why was this a correction? Well, from 10:40 until 2 o'clock, that's the same amount of time, obviously a little bit longer, to do half the move. Okay, so that's how we know it's a correction. And also you can tell by the price action, it's very, very choppy. Okay, the price action is very choppy. Now, when price broke through to the downside, okay, we formed this new lower low within the market. We have an understanding, or I have an understanding, that price is going to correct back towards the upside. And rather than waiting for this whole move to be completed, potentially there's a chance to actually take advantage of this move. If you know that the probability is for price to correct and pull back up, why wait for price to come all the way back up before you take a sell position? Why not maximize and take buy positions along the way? That's what I look to do. Now, sometimes it's not going to work out, but sometimes you can catch good positions throughout. For example, you can see multiple times where price formed some double bottoms within the market. Okay, a nice time to potentially be taking some buy positions on the way back up to take advantage of the move. However, when you're trading in the correction, you have to have in the back of your mind that you are trading against the trend. You're trading against what the overall view of the market is. And with that understanding, you can then manage your trade differently. For example, let's say you do take a position at this double bottom, and when price comes back down to this level, you get into the market, okay? Let's say with a position like that. Now you need to establish how you're actually going to manage that trade. So first things first, take profit levels. When I'm going against the trend, you have to have a certain level where you're looking to get out of the market. And you can do that by looking, well, where are sellers actually going to step in and where am I going to get into the market for a sell position? So we're definitely going to use this area of previous support to be used as resistance. Okay, that's one area where we could look at targeting this area over here. Another thing we could potentially add in as a target is we could say that price is trending to the downside and use this trend line right here. Another thing we can add on as well is Fibonacci retracement levels. So we could draw from the swing high, drag that across to down here. And we can say that, okay, well, potentially the 61.8 level is lining up with potentially where sellers are looking to step into the market. So we can drag this down and we can set our take profit level right here. And in this instance, that will give us a profit of a 1 to 4, okay? So we have a stop loss, we have a take profit because we know that we're going against a trend, so we want to get out of the market when we can. So that's where I would look to get out of the market. And as you can see, we rejected that level. When price had this impulsive move, let me zoom in a little bit. When price had this impulsive move to the upside, straight away, as soon as we break through this level of resistance here, I'll be trailing my stop loss to break even straight away. As soon as we break through structure, we had a nice movement to the upside. I'm moving my stop loss to break even. And then straight away after that, you can see that we would have hit take profit level. But then look what happened straight after that. Price moved all the way back down, okay? Because as you can see, within a correction, price will not just move very, very smoothly in one way. It will have very, very choppy price action going up, coming down, going up, coming down. You're very, very likely to have a worse performance trading within a correction. However, that doesn't mean that you can't be profitable throughout it. And if you're someone who likes getting in and out of the market quite quickly, then trading within a correction can actually be beneficial to you. It's just about understanding what phase of the market you're in so you can manage it efficiently throughout that phase. So that would have gained us like a 1 to 4, okay? And we're trading within a correction and we're very, very strict with our targets, with our trailing stop loss and everything like that. Now we're going to go on to how we would obviously trade the continuation. So let's say we've taken our profits there. We're now looking at where we're going to get into the market for a sell position. So when we're looking for the continuation, okay, we want to be identifying the most probable place for price to pull back to, okay? In this instance, the most probable place is obviously this area of support to be used as resistance multiple times throughout the market. You can see this is an area of sensitivity throughout the market where multiple taps have been happening. Okay, so we could say somewhere like this level here. Not only that, but we can see this trend line that lines up with there, and also the 61.8% Fibonacci retracement level. But this is where things get very, very interesting because most of you are looking at that and thinking, well, that's not a good time to get in because price pushed a lot further up to the 78.6. And you're exactly right. Now, does anyone know the final step that you need to look for when you're getting in sell positions on the continuation? Does anyone know that final step that is key for my trading? When I'm going with the trend, what do I need to see happen? I need to see a shift in market structure on the lower time frames, okay? So we're here now. Get rid of that trend line because we don't really need it in this instance. But we are technically, when price is moving within this correction, we are technically moving towards the upside. Price is in bullish market structure. When I'm selling, I don't want to be getting into the market if price is currently bullish. I don't need to be first into the market. I don't need to be getting in right at the top of the reversal. I would rather wait for price to be bearish be moving towards the downside, and then I can take my position. Because as you can see, there's multiple times price has just created like retail traps, stop hunt traps, where we've come up to the 61.8 multiple times and we've rejected it. There will be many, many people who will be seeing, for example, this candlestick pattern, evening star, whatever you want to call it, where you're seeing a rejection here, entering their sell positions like so, targeting down here. But what they haven't understood is that price is still bullish. We're still moving towards the upside, hence why we did see price come back down, and you'd be happy, obviously, price is moving towards the downside, but then price comes all the way back up towards the stop loss. Why? Because price is still bullish, okay? We're still moving towards the upside. So what has price done here? Price grabbed liquidity at the 78.6% Fibonacci retracement tool, and then we can clearly see that sellers have stepped into the market from here. And not only that, but we've now broken through market structure, because we can see all the higher lows that are being formed, we need to see broken up here and then up here as well. We can see where price is trying to form a high low position. We finally get a push towards the downside, price then pulls back, and that is where I am entering my trade on the retest of this level here. And as you can see there, price has formed a lower low within the market, and then we pull back and we form a lower high. And that is where I will look to get into the market, okay, with my stops above the high, like that. Now, that is getting into the market a lot later, but it doesn't necessarily mean that you're going to not make as much money. One, your trade is more probable, and the probability is higher because obviously you've seen the break of market structure. But not only that, you can get a much better entry with a tighter stop loss and a higher risk to reward, and you've got in later. Because if you get in at the top of this here, for example, you get into the market whilst price is bullish, you don't really have anywhere to put your stop loss above because you haven't seen a break of structure yet. So really, you would have to put your stop loss above here because that's the most recent high point that we have. Whereas if you get in down here, we've seen structure being broken, we can put our stop loss above the high. Now, in terms of the trade management for this, it's a lot more kind of relaxed because price, you're going with the trend and you can see how fast price is moving towards the downside. So yes, we have a nice push. I will probably trail my stop loss to break even as soon as we break through this low. For example, this low here. As soon as we break through that level, I'll trail my stop loss to break even just to protect the capital. But then as price is moving towards the downside, there isn't really any structure or anywhere to trail stop loss. So every time price hits a new kind of milestone, a new risk to reward, you can just trail your stop loss quite freely and quite relaxing because you know you're going with the trend and you can just let it do its thing. You can let it ride. However, in terms of actually having an area where you want to exit the market, when you're going with the trend, one tool and one trick that I use is identifying the length of the impulsive move that we had at the start by using this tool here, the price range tool. I measure out the initial impulsive move that we had. I then copy and paste that, and I put that to where the next continuation has taken place. And I use that as a rule of thumb to start exiting my trade. Because if this was the volume pumped into the market to drive price down here, the same amount of sellers are very, very likely to be entering the market again to drive price down towards this continuation. So I would tend to take my profits at the same amount of volume. And as you can see, in this instance, it would have been very, very wise to do so because you can see once we actually reached this level, price began to correct. Again, we began to correct. And what this means is that sellers have obviously taken their profits, the momentum has run out. And if I play price out, we just start correcting. We don't want to be involved in the market after this, okay? Because the same thing is happening again. We have a correction. And that's why you want to be getting out of the market at the length of these sellers were in the market here. And that would have been my position, okay? So yeah, guys, I hope that was helpful. That is just the kind of trick that I used to know how to trade within certain phases of the market, whether you're trading within a correction. To recap, when trading within a correction, you want to be stricter, or I am personally stricter with my trade management. I have an understanding that price is going to be a lot more choppy, so I have a hard take profit level. I trail my stop loss quite more strictly. However, then when I'm trading with the trend and I'm going within an impulsive move, I will be more relaxed. I tend to not have a take profit level because I'm going with the trend. And the way that I trail my stop loss is a lot more relaxed than it is when I'm trailing it during a corrective phase. So yeah, guys, I hope that was helpful. Let me know in the comments what you thought, if that was helpful for you or not. Make sure you subscribe to the channel if you're not as well, because over 50% of you who watch the videos still aren't subscribed. I believe we're very, very close to 40,000 subscribers, which is great. We might have already hit that already. So I appreciate every single one of you who has subscribed. I'm going to keep posting as much as I can. But yeah, guys, I hope this video was helpful. Leave a like and a comment, let me know your thoughts. And yeah, have a great week, and I'll see you in the next video.